Hey guys, Wooly from Panda.com. Welcome back. So today I'm going to talk about something that I generally don't talk much about, and that's shorting stocks or just shorting in general. So I think I want to keep it simple. I've traded other products like futures and forex, but I think I'll keep the focus on stocks for now. So I want to just like maybe explain just shorting stocks for those that have never done it before. So the actual behind the scenes mechanics is that you actually have to borrow stock from another stockholder, and your broker will help facilitate that. So usually what happens behind the scene is like the broker has to locate shares that are available for shorting. So basically what you do is you borrow some stock, you sell it hopefully at a relatively higher price, and then if and when the stock price does go down, you buy it back and then you return it to the original shareholder. And if the stock normally pays a dividend, you are actually responsible for that. So generally a lot of people, they're a little bit afraid of shorting, and I can understand why, because it can be very painful sometimes, because if you short too early, you can quickly get run over, especially in like the stock market that we have recently. Like the performance is just like, it seems like every other day there's like a new all-time high, and I think the bull market will continue for quite a bit, but since we are talking about, I guess, like the sort of like the dark side of trading, I want to give you like some of the shorting skills or some alternatives that you can do while we wait for the eventual bear market, because I think it could get really nasty. Could it get as bad as the Great Depression, or could it be as bad as like the dot-com crash of like the year 2000? My guess is that will be somewhere in the middle of that, or it could be something that like in between, like what we experienced early February, March of 2000, where we had just this crazy I guess like a pandemic crash. But I mean, it was relatively fast crash. We've obviously recovered. Well, for most traders and investors, most people have already recovered, and some were actually even more profitable than before. But anyway, so I talk a lot about like the Wheel of Fortune strategy. So if you want to apply that to like the dark side of trading or shorting stocks, basically what you can do the reverse. So for the Wheel of Fortune strategy, first we sell a cash secured put, and then we wait for the stock to be assigned to us, and then we can sell covered calls against that, and then at some point we'll get the covered call assignment, and then we start all over again. So we can do the same thing for shorting stocks, but in the reverse. So what we could do is sell a call, wait for the stock to be assigned to us, which is, but in the reverse order. So we're actually selling stock, and then when the stock, hopefully, if you call the timing and the direction correctly, the stock will go down, and then what you can do is you can sell a put against it, and then what happens is you'll buy it back, and then closing out your position. But here's the thing, selling a naked call is not appropriate for most investors. In fact, some brokers might not even allow you to do that. You probably have to have probably like the highest level of options clearance available, and that's usually like level 4 at some other brokers. So you have to probably fill out some forms in order to do that. I think for Tastyworks, when I first applied, I just applied for what they call the works. So I'll have you have full options trading privileges, and also um, have a portfolio margin account available. So for it's not for everyone, because selling a call can be really scary, especially if it goes against you. In theory, you could have unlimited risk, but usually, nobody, you know, loses an infinite amount of money. Usually, what happens is you can lose a lot of money. Like for example, if you try to short, maybe like if you early in the year, maybe you try to short Tesla at 400, like right before like the stock split, and then the stock just like really took off, and you lost probably up up like thousands of dollars per every share that you try to short, and that could be really painful. So it's not for everyone. I'm just letting you guys know up front, just so you can mentally prepare yourself, because it is really painful when you solo call, and unfortunately you get assigned and you short the stock, and then the stock just like rages higher, and it's really you feel really bad, and then not only just for like your account, but just like mentally you see other people make money, but then you're losing money, so it's really it's tough for most people, but if you can get the timing right, it's incredible. Like the gains can happen overnight. Let's say in the future we could have another flash crash, we have like another like maybe we have murder hornets, or we have like another pandemic, or we have a war, or something, some crazy scenario, and the market can just like crash overnight, and then you have some protection. The reason why I bring this up is that I do expect like a bear market in the future, but I just don't know when. So I'm actually, for my own personal portfolio, I'm practicing some new shorting techniques. So what I've been playing around with, I'm selling out of the money call spreads instead of just an outright naked call, because I've been burned before trying to short stock. And then there's also another problem with just shorting stocks in general. Sometimes stocks can be hard to borrow. So on the Tastyworks platform, they actually show you which stocks are hard to borrow. So in a few minutes, I'm going to show you what it looks like on the Tastyworks platform itself. So that's why you can do like the wheel of misfortune, which you could probably sell a call or a call spread, and then if you happen to get assigned, you could wait for the stock to head down before selling a put. Or if you sell a call spread, no big deal. You just close out the position for maybe a small gain or a small loss, and then just move on, and keep waiting for optimal places to short again. Because I think for most people, I think it's a good idea to have some type of protection. If you don't want to like short, you're leaving some money on the table. If you're a competent short seller, you could add up maybe additional like 30-40% to your overall portfolio to balance out if and when like the market has a correction, or if the market has a bad day, you have something to kind of buffer those losses. And in the future, I'll also maybe make this as like a full series. I'll add to like the dark side of trading, maybe how and when to buy puts for portfolio protection, or to protect yourself against maybe you already have significant gains in certain stocks and you want to kind of protect yourself. I'll make future videos about that, but let's head on over to my Tastyworks platform, and I'll show you maybe like an example and what it potentially could look like. So, all right, I'll see you in the platform.
Okay, so welcome back to the Taste2Works platform. So as you can see, I have a small position in Octo already. It's just a quick earnings play. I'm probably just gonna get rid of it probably early in the morning. The IV rank right now wasn't that great, but I mean there was a little bit of premium. And the reason why I bring up Octa, because one, if you notice near the upper right hand, closer to the middle over here, like Tastyworks lets you know that the stock is hard to borrow. So if you wanted to just short the stock outright, it could be a little bit tricky. So you could probably contact the the support team and see if they can locate some stock for you to borrow and then short. And I guess like depending on what your time frame is, like today probably would have been a pretty decent day if you shorted 100 shares today. As you can see, it lost almost close to $7. So you probably could have picked up like $678 if you try to short it today. But I think for me, I like to think like a little bit like longer term. So if I wanted to short this on a longer term basis, I probably would wait. Just because like the sector in general, um, it's been like a fairly strong this year. Most of the I guess like cybersecurity as a service or just like the software as a service sector in general has been pretty strong. I mean, it's been slowing down, but I don't see it as a great shorting candidate just yet. But I am keeping an eye out in the sector, as I think if we are to have like a big crazy like crash or like a big market, I guess like the past winners, like the biggest winners, will probably be the biggest losers. And this is not to slight Okta. Actually think it's a pretty interesting company. It's more of like identity management. So it's part of kind of like for me, it's part of like the overall uh, cybersecurity sector. But there comes a time when you just say, wait a minute, like I'm paying way too much for a company. I mean, even though it's a cool company, a lot of people like it. At some point, I don't know if it's now. So it looks like they had pretty good earnings. Like the stock shot up. So I think my cash secured put will probably be okay. I'll take it off early in the morning tomorrow. Um, but as you can see, like year to date, like since like from the March lows, it's just like been almost straight up, and now it looks like it's kind of consolidating a little bit. Um, but I think that there's probably like room for it to run up some more. So I don't want to like just short it right now. But if I wanted to take like a maybe like a shot just to see what it'd be like, the IV rank is at 30. It's not the lowest, so it's not too bad, but it's not like that great either. But just out of curiosity, I'm just gonna show you what a short trade for me could probably look like. So I'm just opening up the strikes. So if I wanted to do something like near the one one standard deviation, I'd probably look at something like here, like around 300. Because I don't want to just short it like at 230. I don't think it would be that interesting for me. But if I wanted to say do like a synthetic short, I would short let's see, the 300 strike looks okay. It's not the greatest again. Um, because if you think about it, like if I wanted to take a shot, I would short this, as part of my overall portfolio. I'll pick up $1.84, and if I follow the taste trade mechanics, within like 20 days or so, I'll probably take it off for like around like a $90 profit. But as you can see, like over here, like the most I can make is $100.84, and then the max loss is like infinity. Um, but you know, most likely it's not going to go to infinity. I mean, if you look at the like the highest call strike over here is it's at 360. So market makers are probably thinking like it's probably even if you do lose, um, just based on like the maximum strike over here, like it could be like $6,000 or so. But like the risk reward right now isn't like that great. So like the most I can make is 184 versus a loss of about 6,000 or more. Isn't so hot. But let's just say, for example, that between now and January 15th, 2021, so a month and a half, the stock, maybe there's some crazy good news. Maybe there's a like a buyout offer, because like CRM recently bought out Slack, so maybe if there's like some mergers or buyouts within like the overall software as a service space, I could get really beat up here. So like, let's say like for example, it just happens to shoot up from 230 to $300. Um, I could probably take a lot of pain. But let's just say there's no buyout merger and it shoots up from 230 to 300. Um, and let's just say I get assigned exactly at 300. I could actually add this 184 to like my um, cost basis. So like let's just say I did get assigned. So I'm gonna add the 300 plus like this $184 that I collected. So that's like I really shorted it at $301.84. And I would look for like a place to buy it back. So I so let's just go to the next month. Let's say 230, and then if like everything works out, and I sell the cash secured put, I could pick up like another. Let's just say like it goes back down to like the original 230. Again, this is just an example. Just for illustration purposes. I could pick up like another, about $2,190. And let's just say again, I get assigned exactly at 230 to close out my position. Like basically it was just like a perfect round trip. Um, then it's not bad. You buy it back at $2,190. And I close out the position for $2,000 in maybe like 2 months time, and for some people that can be like an nice little extra cushion in their portfolio. Um, but of course, like in real life, things don't always work out that neatly. I'm just giving that just as an example off the top of my head because, as you can see, it's been kind of like ping ponging, kind of like back and forth in like this range. So like the actual results will vary. Real life trading isn't always so like nice and neat, um, like in the textbooks. But I just wanted to give you guys like just a quick overview of what that could potentially look at like for a wheel of misfortune strategy. So if you guys like this type of content and you want more, please let me know in the comments below. And then, of course, I always appreciate likes and subscribes. And then yeah, so thank you so much for watching, and I'll see you in the next video. Have a great one now. Bye bye.